Hello and welcome to our next video on the inventory practice exercise for Perpetual LIFO. In this series of videos, we're going to be covering each of the different inventory type methods, dealing with how cost of goods sold and ending inventory is calculated. So we had a video covering the perpetual and periodic FIFO methods, and in that video we talked about how the results are going to be the same regardless of whether it's perpetual or periodic under FIFO. But under LIFO, and by the way, FIFO is first in, first out. We're going to cover all of that today. LIFO is last in, first out. Perpetual LIFO is what we're going to be covering in this particular video. But we'll just briefly talk about why it would differ from periodic LIFO, as well as what the difference between perpetual and periodic is to begin with. So in this video, in this exercise, we're going to see a pretty basic data set that you would see in a lot of your different accounting problems, in whether real life or textbook. And what we'll see, the question is simply, hey, Phoenix Industries had the following transactions throughout December of 2020, 1 month, and then it asks us 7 different questions about that data set. So this is a pretty standard data set. You have some purchases, some sales, and it just repeats a few times. Now, one thing I do want to draw your attention to is this is 1 month in time, and you'll know we have the unit costs for any purchases and then the sales price for any actual sales. So you have to keep those separate. They're two different things. But notice the purchase prices, there's actually a pretty drastic increase throughout 1 month. The reason we do that is just to really show the difference between the methods. If everything was just $1, and it never changed throughout the period, then it wouldn't matter what method you used because you'd have the same results. So a lot of textbook problems show rather drastic increases or decreases sometimes, just to show why it matters to do this right. So the other thing I wanted to mention, when you see this type of data set, notice that you have X number of units purchased or sold, and then you have a per unit cost. One of the first things that's handy to do is create a, if you want to call it a total cost, and then a total sales for each actual layer. And layer, by the way, is just a generic term for each of these rows of inventory. Every different purchase has its own cost. Every sale has its own sales price. So they're all layers of inventory. So a total would simply be multiplying the number of units by the unit cost, and you can drag that down, and then notice that some of these, the sales prices, that'll be over here. We won't need that in the cost. So that's what we're doing here. The other thing I want to mention here is with any of these inventory problems, you have to remember, again, every row has its own cost, but you only have 150 of these units at $11. So when you're trying to sell some units, you can't just continuously grab at $11 or even $13.75. You can only do that for as many of those units as you have, and then it's gone and you have to move to a new layer. So again, the first set I'd like to do is just calculate a total cost and a total sales for every row. And then I also want to do a grand total. This is actually going to be, it's going to take care of a couple of our questions in just a bit, but it's nice to do that up front. So we have total $68.50 in cost and $89.35 in sales. And obviously the company has to price their product above cost, otherwise they're never going to be able to account for all the other expenses they have. So that's what they're doing there. So the first 3 questions down here are all about units. They have nothing to do with dollars or cost or sales, just the units, the actual raw unit count. How many units were available for sale throughout the period? I'm going to move this one over just a little bit. So here we have the beginning inventory of 150 units, plus we had 110 more. We don't worry about the sales yet, because that's a different question. We add in the next purchase, and we just keep doing that. We add in the beginning inventory and all of the purchases, but we do not do anything with the sold units yet. Now, question 2 is how many units were sold during the period. That's where the sales numbers start coming into play. We sold 415 units. We had 560 that we could have sold. We sold 415. So if we subtract the two, if we had 560 and we sold 415, we must have 145 left. So those 3 questions are just units. Number 4, what is the value of the goods available for sale throughout the period? Now the value, we're saying the cost. What is the total cost of those units that we could have sold? We already did that. We did that with this total cost column. We took the total cost for every row without considering anything that we actually sold, and then we added them up. So our answer here is 6850. What is the total value of sales throughout the period? Now again, this is sales, not cost. Again, we already did that though. We added up all the sales over here. So that's 8935 as well. Now the important thing I want to point out here is that these first 5 questions are going to be identical regardless of what method you used. These have nothing to do with what cost we're using, and that's what the methods really help you to do, or they tell you how you need to move costs over out of the inventory over to cost of goods sold. That's the only purpose for periodic and perpetual, as well as FIFO, LIFO, and weighted average. That's the only purpose for those methods, is to tell you in what order do you move those costs over. So what I want to point out here is very important. Number 4, the value of the goods available for sale was 6850. When we jump to number 6 and number 7 in a bit, we're going to look for the cost of goods sold and the cost of ending inventory. Those two have to equal 6850. This is the cost of goods that's available for sale. Some of those are going to move out to cost of goods sold, and the rest is going to be left in ending inventory. So when we add 6 and 7 up later on, it has to exactly equal 6850. And by the way, when I say exactly, I want to caution you on that. There might be a rounding difference depending on what your costs were. In this case, they're fairly round. They're quarters, 75 and 25. If you ever had like $12.33, something like that, then you might run into a little bit of a rounding issue where you may be off by $1 or $2. But we're not going to see that situation here. So just be careful with that. Number 6 is the cost of goods sold. Number 7 is the ending inventory. This is where the challenge comes in for these types of problems. And what I like to do, first of all, is I like to take my data set and essentially recreate it in a place where I can work with it. So I'm going to move it down here. For this, we don't need to worry about the units sold, so I'm going to delete those lines out. We only need to know what inventory layers we had, because the goal here is to figure out how do we move them out to cost of goods sold. So what I'm going to do is call this recreation. I'm going to get rid of the sales price. I'm going to call this recreated data set. I'm going to call it ending inventory, because when we're done, it's going to indeed be the ending inventory. Our problem here is going to be moving costs out of this inventory down to cost of goods sold. That's the whole purpose here. We can do both at the same time. And the other thing I want to do, though, is I'm just going to put a totals column in here. Same thing we did up above. I want it for every layer. I want to have the total cost, and I'm going to get a grand total here. Now, one thing I do want to mention is, depending on which method, or depending on which textbook you use, how your instructor sets this up, you may have a template that they want you to use, or you may be doing this completely from scratch. I have other videos where I've used templates, pre-created templates, but for this video, I wanted to walk you through from scratch how to set this up, because in many cases, you're going to have to do that from a textbook problem, so it's nice to know how to do it. So we have that. $68.50 grand total ending inventory at this point. I'm going to move this down just one row. Now, what we're trying to do here, you can do this a variety of different ways. You can illustrate this in different ways. Oops, gotta back that out here. And you can, I'm just going to make this as clear as possible, I'm going to say from what layer. I'm going to have a column in here illustrating what layer this is coming from. And units, total cost, and then the totals. Yeah, I'm going to do kind of a grand total column over here. Again, you may not need all of these rows, all these columns. I'm just trying to make it as transparent as possible. And then when you're doing the problem, you can illustrate it the way you'd like. So for this, the whole goal of what we're doing right now is we're trying to figure out for every sale that we have, which costs do we pull over? So the first one, we need a December 7th sale. That's our first challenge here. We need to sell 125 units, and we need to know, at this point, these are the two layers we have. So which ones do we pull from? Now here is the challenge for this one. This is perpetual LIFO. What perpetual means is that every time we have a sale, we're going to be doing our debit to cost of goods sold, credit to inventory, that journal entry. We're going to be doing that every single time we have a sale. As such, on December 7th, we need to know what costs we're going to use. Now, in real life, on December 7th, we do not know what this information is. This hasn't existed yet. So under perpetual, we can only deal with what we have at that time. That's the challenge to perpetual. If we were doing periodic, then we wouldn't be doing any entry until basically December 31st, at which point we know all of these costs. Under FIFO, it won't matter because you're starting from the top, working your way down anyways. Under LIFO, it's going to matter quite a bit. We're dealing with perpetual LIFO right now, so I just want to make that clear. We're dealing with a December 7th sale right now, so just temporarily, I'm going to gray these three layers out because we don't know about them at this point. On December 7th, this is all we have, these first two layers. Now this is LIFO. Last in, first out. What that means is we're going to start with the latest layer available on this sale date, and that's where we're going to pull from first. So in this case, I'm just going to say December 3rd purchase. We're pulling from that layer. You can call it whatever you want. I'm just illustrating what we're pulling. We need 125 units. We only have 110 from that layer. They're $11.75 a piece. I'm just going to do the multiplication there. We're not done though. We need 125. We only pulled 110. And by the way we have it set up, when we pull from a layer, we have to update that layer up here because that way, when all is said and done, we'll have ending inventory. So we used up this layer. We moved it down here. But again, we're not done. We need 15 more. There's only one layer left to come from. That's the December 1st beginning inventory. It's still the December 7th sale, so I'm not changing that. 15 at $11. And now we need to update this. 150 minus 15 is 135. That's what we have left. You've got to keep this updated, otherwise your answer at the end is not going to be correct. We have our 125 units, and if you want to, just to make it easier, you can put a pause there, and you can say, hey, 125, and then the total cost. The total cost of that sale itself was basically, if you do that, you don't really need this grand total. So that was the 1,457.50. You can do it a few different ways. We'll try it that way for now. So the total for this December 7th sale was, we got our 125 units and the total cost was $1457.50. So now let's go down to the December 20th sale. So it's perpetual LIFO. On December 20th, now all of a sudden we know about two more layers. The 12th and 15th have happened, so we can open these up and we can start using from those layers. Now this is where LIFO gets a little odd, because keep in mind, we cleared out the December 3rd layer, and we even started using the December 1st layer. It's partially used up, but now, since we're dealing with LIFO, we're going to start with the last layer available at that time, which means we're jumping all the way down to the December 15th layer, even though we partially used up the first. That's fine. That's how perpetual LIFO works. So we need to get 140 units for this sale. We can only pull 120 from this layer, and that was the December 15th purchase. Those were $13 a piece. So if we multiply those out, we get $15.60. So now we use this up. That's gone. Update it. We needed 140 though, so we still need 20 more. Now we move up to the next to last layer available at that time, which is the December 12th purchase. Just going to change that here. 20 units at $12.25 per unit. We need to take that 85 down to 65 now, because we sold 20 of them. Notice how that's continually updating our ending inventory. And now that was 140 units. That's all we needed. And I need to do the multiplication there. So now we have $18.05 for that sale. The cost related to that sale. Keep in mind, this is cost. If we wanted to look at the sales price, we know, for example, that December 7th sale, the sales value is $26.25. The cost is $1457.50, so they made profit. The second sale was $30.10 sales price. The cost is $18.05, so again, they made profit. If you really want to compare the two, that's fine to do. But for now, we're focused on cost. So we've updated everything. We took that from 85 down to 65 for this 20. Now we're on our last sale, December 30th. Now this last layer opens up. We know about it, so now we can start using from it. We're on the 30th. We're well past the 23rd. So we're in LIFO. So we're going to use the December 30th, or I'm sorry, 23rd purchase. I'm just copying it to save some typing here. And 23rd purchase. We need to sell 150. We have 95 right there. And they're $13.75 a piece. So, like I said, we needed to sell 150. We only have 95 from that layer. We're going to zero that out. We need 55 left. Fortunately, the next to the last layer available at that time has plenty. It has 65. We only need 55. So that's the December 12th purchase. The 55 units were $12.25 a piece. By the way, I need to do my multiplication here. So we have our 150 units. I didn't update this. We had 65. We used 55 of them, so we're down to 10. Just to double check, we have our 150 units. And we have a $19.80 cost. And we're done. We've updated everything. At this point, let me move that over here. Of grand total cost. We have the grand total of the ending inventory. Now we just need to add up the costs related to those three sales. And we have 52, 42, 50. So our answer here, cost of goods sold throughout the period, that would be the 52, 42, 50. I'm just going to reference that cell. The value of ending inventory, we've been updating that along the way. We have 1607.50 left. Now, remember earlier I said that our double check is going to be that the sum of 6 and 7, the cost of goods sold and the value of the ending inventory, that has to equal this value of goods available for sale. So let's just double check. Sure enough, it's 68.50 as it should have been. So this is one way to do it if you like separating them out. In the earlier problem, I didn't really put a total along the way. I put the total to the side. Again, I just want to illustrate there are many different ways to show this problem, and a lot of it depends on what your instructor is looking for as far as a template. But if there is no template whatsoever, then any of these methods should work. Your instructor should allow for those, so just keep that in mind there. But this is how the problem can be completed. Perpetual LIFO is the trickiest one. When I say tricky, it's the most unusual because of the fact that it leaves layers partially used up. It skips between layers. That's only going to happen in perpetual LIFO. Periodic LIFO, you're going to start from the bottom at the very end and work your way up. So you're not going to have a zero here and then a number, then some more zeros. That's only going to happen in perpetual LIFO. So hopefully this has helped to show you how to walk through this type of problem. I look forward to talking to you in our next video, and I thank you for your time. Have a good one.